Good morning, ladies and gentlemen, and welcome to today's webinar, Real-Time Daily Trading Ideas. Today is April the 23rd, and just like every day of the week, I am speaking to you from our office in the heart of Berlin. I hope those of you who celebrated Easter had an enjoyable couple of days off so that we can have a powerful start of the week. Today we will be speaking about trading ideas, strategies, market screenings, and we'll be answering your questions. Before we can start with the actual webinar, we will briefly present the risk disclaimer. Trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to its complex nature. Please make yourself familiar with these instruments by using a demo account if you are a starter. Please feel free to contact us if you need any assistance with that. Please also note that none of this is investment advice. The statements made in this webinar only represent the personal opinion of our traders. You can also find the whole risk disclaimer on our website. Here you can see the schedule for the week. Today it's Paul's turn. And before I finish off with the introduction, I would like to invite everyone interested in trading to try us out and benefit from the best index and forex offerings with spreads of just 0.8 pips. Just like every Tuesday of the week, Paul is going to be speaking to us today. I am passing over the screen to you right now, Paul. We should be able to hear you now, Paul.
Good morning. Good morning, everybody. Good morning. I hope you're well. I hope you're all well, ladies and gentlemen. Thank you for joining us here. Here we are, Tuesday, 23rd of April. As our introducer said, it's. I hope you've all enjoyed an enjoyable Easter holiday period. It's as we said over the last week or two. It's been a rather quiet last couple of weeks in markets just because of that sort of Easter break, that Easter recess. But invariably, I think what we'll see is that will change from today. And we've already had a couple of moves in markets, which we'll look at in a moment or two. But yeah, I think definitely as everybody comes back to the desk after that kind of a couple of weeks away, then invariably we will see more moves and more action going on. But there's still plenty for us to have a little look at, a little conversation about. There's no real high impact formal news today. There is sort of a medium level US home sales this afternoon, and just putting that in because that can be, it's a little bit of a lagging indicator for consumer, but it's we're expecting a little bit of a drop, and that might have an impact this afternoon as people come and sit back at their desks and start to look for information to sort of move a market. And it is actually quite a quiet week for formal news. All right, tomorrow we've got Aussie CPI and Canadian interest rate decision, but there's no sort of change expected. And on Thursday we've got the Japanese interest rate decision, and in America we've got durable goods numbers, and then on Friday we've got the head of the Swiss National Bank, Mr. Jordan, speaking at the central bank's AGM Friday morning, and then in the afternoon we've got, for the US, we've got annualized GDP. So it's, in terms of formal news coming up for the for this kind of short week, there's not a massive amount, but there will be enough things to get us moving. And what we are looking at is, in terms of what we've had today, is in the UK, not only is it St. George's Day, but also it is the end of the Easter recess. So for the parliamentarians, they have to return to the House of Commons. That starts to happen today. So I think, as I said, sort of last week or two, the sort of sterling has been very, very quiet whilst the parliamentarians have been taking their holidays, and invariably that had an impact on sterling moves itself. I think we talked about that a week or two ago, and how it was just kind of, the volatility had sort of dried up because sterling is just so sentiment driven at the moment rather than anything particularly technical or fundamentally driven. I'm just going to show you a quick slide just to give you a little bit of information about what I think is going to drive markets over the next, or sterling markets definitely over the next week or two. I'm just going to kind of show you this slide, and because I think it is quite important. What we've had here in the UK over the last few weeks is, whilst the market itself has been quiet, whilst parliamentarians have been away, and what we are starting to see is that Mr. Farage, ex of UKIP, now of his new party, the Brexit Party, has in polling, and pretty much across the board in polling, has leapt into a really quite a strong lead there. So as of the end of last week, his party was polling at 27% in front of both Labour, Conservatives, and the rest of them. Why is that important? What impact will that have upon the sterling? Well, what we have is that at the moment, European elections, the UK is still due to take part in them, which I think is it's May 23rd, May 22nd, May 23rd, sort of towards the end of next month. But that will only happen if Mrs. May doesn't have her deal or a deal ratified in the House of Commons beforehand. And I think there might be a timeline date of about the 12th of May, by which time that has to happen. So this is what becomes important, because I believe that both the sort of, let's say that in the UK the major parties, maybe Conservative and Labour, having seen how how well Mr. Farage's party is polling, in the run up to that will put the fear of God into them, and they will not want to get destroyed at those European elections, and so they will get together. And I think that with Labour, Conservative, the Lib Dems, the Greens, maybe the SNP even, will actually come together and ensure that Mrs. May's deal goes through in some form, because that will basically stop the UK from having to take part in those Euro elections, which would be seen as a crushing defeat for not only Theresa May's Conservatives, but also for the Labour Party, the Greens, the Lib Dems, and the CUK, the Change UK Party. So I think those polls coming out there will, as I said, put the sort of put the fear into the politicians, and it's those that are driving the kind of sterling sentiment at the moment. And so I'm going to be keeping an eye on that, how that polling continues, because as I said, I think that is what will actually look to drive sterling over the next couple of weeks. So be sure to keep an eye on that. So with regards to sterling, is there anything there that kind of interests me that we can look at? Well, as I said, it's been a little bit dull at the moment, but there is an opportunity I'd like you to add to your watch list. It's a bit of a longer term trade, but I think it's one that it's of interest to us to take a look at. And what we're looking at here is pound against New Zealand dollar. Here we are on the weekly chart, but actually if I go down to the daily chart, that might be a little bit better for us. So for those of you who are new to trading, joining us just for the first time, that the charts are quite simple. Green bullish, red bearish candles, blue 20 simple moving average, a red 50 and a green 200 simple moving average, and then just drawing in levels of support, resistance, and trend lines and areas of interest as dictated on the chart. If you want to know more about that, how it's simple to do it, then you can find in the webinar archive, the Mastering the 4 M's of Trading webinars that will give you an explanation how we set these charts and how you can run them. But there we go. We can see that there, and hopefully you can see that already yourselves, that the kind of the 195 level here has acted as pretty significant resistance there. We've seen over pretty much since about December of last year. It's only been up there so February through March. Every time it's got up there, it's kind of fallen away. But what I'm keeping an eye on is not only have we had that resistance there, but hopefully you can see we've had this supporting trend line here. So it's kind of like an ascending triangle after a descent, which is rare, but is valid. And what we'll be doing is keeping an eye on it for, let's say, a longer term trade. I'd be looking to see that could sterling actually get above that kind of 195 and hold above it. Maybe on the daily, maybe even at the end of this week. In which case, I'd be looking at that as quite a bullish sign for sterling, a bearish sign for the Kiwi dollar. And that would be looking then, we'd be sort of maybe taking a look at that towards the end of this week, start of next week, to maybe sort of, can we establish a long pound Kiwi dollar position there? So as I said, as a longer, add it to just our watch list to keep an eye on. It's definitely been of interest. For those of you who are kind of, let's say, more shorter term, traders, well, if going down to it, if you're looking for an intraday trade idea, well, I'm just going down through here the time frames, and we can see that that 195, it's kind of, the price has not been able to really hold above there at the moment. In fact, actually, it's a little bit of a double top. Could actually even be said at the moment is perhaps providing just a little bit of a head and shoulders pattern there on a shorter term time frames. So we're just going to keep an eye on that. If we get a rejection candle there, around about that 195, well then that might be the opportunity to start to sort of look to take an intraday short there, just around about that kind of around about the 195.05, 195 zone, okay, with stops above the highs at 195.12, and then you'd be looking for, hopefully for I'd be looking for a move down towards around about that kind of 94.75 area, which would give me a little bit of a trade. So we'll just keep an eye on that. Add that to your watch list, okay? As I said, on a longer term, okay, we were looking for a long, but we always expect a bit of a reaction when we hit these levels, which we can see haven't been, we've not closed above it on a daily basis for a while now. So just keep an eye on that. There might be a sort of little head and shoulders pattern for a short intraday trade there to take. But one of the things I want to have a little bit of a look at is that I want to have a little look at oil, ladies and gentlemen. And the reason being is that, so just wait for the charts to update, is that yesterday it was announced by the US that they were going to be looking to, Mr. Trump and his cabinet, going to be looking to remove the Iran oil sanction waivers that have been running for the last 6 months. Those of you who followed us, okay, we've talked about this, probably about 6 months ago in terms of the Iran oil deal. Okay, that was that was pulled by Mr. Trump middle of last year. But there were certain countries that were given a waiver to continue importing oil from Iran. Well, Mr. Trump has come out and said, well, that's not going ahead anymore. Okay, that's going to be pulled. And of course, that has had an impact on oil itself. So here we are. This is a profile for commodities. Okay, we covered this in the Mastering the 4Ms trading webinar yesterday, which you can catch in the archive. But here we've got both Brent and we've also got West Texas here. Okay, I'm just going to pull this up here. Okay, on the weekly chart, you can see we had an absolutely storming collapse there. Okay, end of last year, but this year we've had a storming trend back up there, okay, back up above $60. And if I go down to the daily chart, what I'm interested is, this kind of 64.50 area, if we can just see there, okay, if I go down to the 4-hourly chart, this has acted as pretty significant resistance. Some of you may remember we had a bit of an oil trade here, okay, from a couple of weeks ago. What was the we're looking here. I think we were short around about 64.36. We had a stop up at 64.75, and we actually had a target down here at 62.97. And what happened? I closed that trade sort of towards the end of last week. Why? Because well, actually, we got down to our 62.97 target. But with the spread, we weren't taken out on the spread, okay, when it happened last sort of Tuesday morning. And then what happened is later on in the week, sort of, I think it was kind of about Wednesday, what we got was we actually got this, bullish key reversal, bullish engulfing candle. We pushed to new lows, but actually closed way above the highs of the last previous 3 candles. Also back up above the 50 peer moving average. So we closed that trade around about, I think it was 63.55. So it didn't hit our target. We were a little unlucky, but that's trading. But we still got out for a 2-to-1 trade there. But as you can see, the sort of news this week on Mr. Trump pulling the Iran oil waiver. Well, we can see that that's given oil a big bump anyway. Okay, we've actually pushed pretty high there, and I've got this pink block in here because if I go back up to the daily chart, I'm interested to sort of see how, back in sort of October 2018, what we had was, having sort of come off its highs, price actually went into a little bit of a consolidation area there. It was pretty much capped by the daily 200 period moving average before it dropped significantly. And I'm just going to be curious to see how price reacts as it's just getting back up there around about this $66 area. So, when price hits these areas, it's got 3 real simple options. It can bounce off it, it can fly through it, or it can flip about there. Okay, and so this is what I'm going to be watching here over this kind of trade area, this zone. Okay, for the next couple of hours, perhaps the next day or so. Just going down to the sort of shorter time frame, you can see, it just literally banged up against it. And it's just this morning starting to put its nose in there. So I'll be watching to see, what can I see of there? If I get up there and get kind of a bearish engulfing candles there, well, then that gives me the opportunity for, a shorter time frame short there, okay, as there's a little bit of a reaction. But, alternatively, if we actually also slice through it, okay, if we slice through that and close and hold above it, well, then that gives me an indication that, perhaps maybe $70 is back in the sort of in the mix in terms of the next possible sort of psychological level. So we're there at a level there at the moment, ladies and gentlemen. So just to add that to your watch list, okay? Just to take a view on that, okay? As I said, the kind of Trump news will have given markets a little bit of a bump, but now we're going to see over today and tomorrow, how does market react there, okay? There'll be opportunities there for us. We just need to be a little bit of patient and wait to see how that market plays out for us. So just to finish off, we'll just do our normal little look at a couple of trades and ideas, okay, that we can sort of take forward. Very quickly, okay, as always, I want to have a look at the dollar index, okay. We're not going to spend too much time on here. I still think that is in its block there between about 95 and 97.50, but last week we had a strong bullish close above that 97, okay. Dollar is strong. That's what we're keen on, okay. That's, that sort of gives us an indication that, the US dollar is still strong, okay. So that just, that is going to have an impact upon the way we look at our other charts. If we look at euro dollar, okay, in fact, actually, I'm just going to start with dollar Swiss, because the reason is that just gives us confirmation, okay, that we've got strong dollar. You can see here we've got parity level here, 1, okay, which we've been bouncing about, okay, but not really, not really sort of closed above it with conviction. It's always been pushed down. But you can see last week we had a real strong dollar close, okay, real strong dollar close, and this week we've pushed through with it again as well, okay. It's just giving us more indication that dollar strength is still there, and then also an element of Swiss weakness. But if I look at a euro dollar, okay, this 113 level is, as I said, we talked about it. It was acting as support. Then a couple of weeks ago we talked about, is it acting as resistance? We had a trade a week or two ago. Okay, I talked about how I wanted to see how price reacted once it came back up to the 113 level. Okay, and we were looking at bearish rejection. Okay, and that's what we saw there. And we had a trade here on the 4-hour chart. Okay, from about 7-8 days ago. Okay, we had, what did we have? We had a really nice after a nice uptrend, we had a bearish key reversal candle. If you want to know more about that, check out the Mastering the 4Ms trading webinar. And we had a short there, didn't we? We had a short there about 113.10. We had a stop loss above at 13.27. We actually had a target down here around about 112. Okay, but what happened is we had a really nice drop there. But I didn't want to carry the position all the way through a 4-day long weekend. Okay, that's not really particularly what I wanted to do for a bank holiday weekend. So we exited that trade around about 12.47. Okay, so we generated about 63 pips there of profit from the trade, but it also meant that I could have a relaxed Easter bank holiday, not having to worry about having open positions. But and actually we can see that we've just had a little bit of a drift north there. Okay, but as I said, I expect to see a little bit of that dollar strength to continue through. Pound against dollar, well, we've had a little look at sterling. Okay, we looked at that pound against New Zealand dollar. The only thing to sort of draw your attention to here is that last week we closed beneath 130. Okay, look at that, we closed beneath 130. Weekly chart there, we've got the 130 level, we've got the 50 period moving average coming down from above, we've got the 20 period moving average coming up from below, and price is in a little bit of it's a little bit of an area there. Okay, it's a little bit of a squeeze going on. Okay, we've talked about this before. When we see squeezes like that coming together, well, invariably, we're expecting to get a really strong move one way or the other. It's kind of like everything gets pushed together before it gets repelled apart from price away from the moving averages. So as I said, we've got the politicians coming back today, so we're going to start to see as probably as they all get back into play in their games this week, that will undoubtedly have an impact there. Okay, so as I said, I'm expecting a little bit of a move, a little bit of a breakout there. I don't see any particular pattern there, okay, at the moment to get me excited. Okay, but I'm just keeping an eye on that kind of how price is going to react as the politicians get back to the desk, the politicians start saying stuff, and that will undoubtedly have an impact upon these in sterling. So let's have a little look at finish off at DAX, one of the other major, very attractive trading instruments here at Admiral Markets. Let me just take this off. I was looking at some trade setups here for us. We've already been triggered there. Okay, so it's we're looking at weekly chart run up there. Okay, we talked about this for the last few weeks. It's mostly being dragged north by American indexes. Well, we continued to push up there, but we started this week by kind of running out of steam a little bit. And what we had here, okay, is looking at how price had a little bit of a gap up, pushed down, and of course with a little bit of a gap down, markets closed because of Easter holidays. But what we can see here is that if I go down to the 30-minute chart, is what we were looking at this morning, is that prices here we have is the sort of the power of the 20-period moving average. We finished okay, with a nice sort of key reversal there. We tried to gap up above it higher, but actually what came down was that price gap down. Okay, it's tried to rally up. It's hit that 20-period moving average. Okay, and that's acted as a significant sort of move down there. And what we've just been looking here at trades this morning. Okay, we were talking about how an aggressive trade. We were going to be short about 112. 212, stops above 1228. Okay, the target's 12167. But actually, of course, we've seen price moving down here. I wanted to see if price broke this kind of low. So I'm going to be looking to be short. Okay, around about 1298, 198. Okay, shorts there. Stops at 12228. Okay, 20 giving us about 30 pips of trade risk. And then looking down to target back down in front of about 12120, okay, just in front of the 200-period moving average, okay, and also this kind of support, this support resistance level there. So there's a little bit of a DAX trade. I'm sure it's going to bounce about a little bit there for us, okay, but there'll be an opportunity there that gives us a good reward to risk ratio for our trades. So there you go. As always, just a quick look through. Welcome back after the Easter holidays. I wish you the best of success in your own trading, and I look forward to speaking to you soon.
All right. Thank you very much, Paul. Thanks for the comprehensive analysis. Thanks to everyone for listening. If you would like to review the webinar, you can do so anytime. Just give us a couple of minutes, couple of hours to upload it onto YouTube. I wish everyone a good start into the week. Thank you very much, guys. Bye-bye.